Good afternoon. This is Lance Bryce with Thrive Mortgage. Today is the 14th of July, Thursday. I hope you're doing well. Tremendous amount of volatility in the bond market over this last week. Here's where interest rates are as far as Mortgage News Daily's national average for the 30-year fixed conforming is concerned. We're at 5.77 today. That's up a bit from this time last week. We were at 5.73% on our last call. Frankly, I would have expected rates to be higher because this morning we had a blockbuster inflation report. I'm sorry, this was yesterday. Producer price index came in much stronger than expected. Year over year was expected to be 10.9%. It actually came in at 11.3%. So any notion that inflation is starting to ebb or at least slow its rate of increase was dashed by that report. And that opened up some fears that the Fed is possibly going to be more hawkish in their upcoming decision on what they're going to do with the federal funds rate. They moved 0.75 at their last meeting. Expectations were for another 0.75 at the next meeting. However, the markets are starting to price in a possibility of 1 point, and I kind of doubt that. We'll discuss that a little bit more if we have time. Dow Jones down 142 today to 30,630. We were at 31,338 on our last call last week, so we're down 708 on the Dow in the last week. And here's part of what is hurting it, as far hurting equities, that is. There are some concerns that we're seeing a slowdown in the labor market. You had first-time jobless claims today that were quite a bit higher than expected. When you start seeing softness in the labor markets, that starts putting a concern into stocks that we're going to see slowing growth, potential warning signs of a recession in the offing. Stocks are not going to like that. Bonds actually might, and that's one of the reasons you don't see bonds reacting more harshly to that producer price index report from that just came in. They're starting to price in the possibility that a recession is in the offing, and if that is the case, then that will take care of the biggest fears of inflation continuing to roar. So that's kind of where you're seeing the money go. Interest rates largely flat, stock market selling off, inflation still raging, the economy starting to slow. As all of that starts coming together, I will continue to update everyone with this information on this call each week. If you have any questions, feel free to reach out to me. You can find me on the web at brycehomeloans.com. All of my numbers are there. Or you can always find me on my cell as well at 210-260-9660. Again, that number 210-260-9660. I'll talk to you soon.